Have you ever wondered how a bank works? Banks are like giant money machines that help keep the economy running smoothly. Here's a simple breakdown of how they work. 1. Storing your money. When you put your money in a bank, you give them a safe place to hold it. The bank keeps a small part of it ready for you in case you want to withdraw, but most of it isn't just sitting there. It's out doing work. 2. Lending money. Banks take the money you deposit and lend it to other people or businesses who need it. For example, someone might borrow money to buy a house or start a business. The bank charges them interest, which is like a fee for borrowing money. 3. Making money move. Banks don't just lend money, they also help move it around. They handle payments, transfers, and even exchange one currency for another if you're traveling. They make sure your money gets to where it needs to go, whether you're paying for groceries or sending money to a friend. 4. Creating more money. Through a system called fractional reserve banking, banks only keep a small part of everyone's deposits in reserve. This allows them to lend out more than they actually have, which helps create more money in the economy. But this can also be risky if too many people want to withdraw their money at the same time. 5. Types of banks. There are different kinds of banks. Retail banks are for everyday people like you and me. Commercial banks work with businesses, providing loans and managing large amounts of money. Investment banks deal with big investments, helping companies raise money or merge with others. Finally, central banks control how much money is in the whole system, keeping the economy balanced. In short, banks are like money jugglers. They keep cash flowing between people, businesses, and the economy, all while trying to make a profit from it. Make it narrate well.